All right, all right. Good morning, good morning. How are you guys this morning? It is another bright and beautiful day. Actually, it's quite chilly and windy out here. Looking forward to the days where it starts to just get a little bit warmer. That would be nice. I'd like to see it get just a little bit warmer so we can go outside without a jacket. That would be nice. All right, let's see. Where are we at today? 6:30 this morning, we had a big active morning. Core inflation rate month over month, core inflation rate year over year. Inflation rate went up year over year. It was 3.1 forecast, and it went to 3.3. So inflation continues to march higher. Forecast was 0.2. It's actually 0.5 for the month over month inflation rate year over year. Went from 2.9 to 3.0. So inflation rate is not doing well. Keeps going up, marching higher. CPI, that was at 6:30 this morning. 8 o'clock, Fed Chair Powell testimony at 8 a.m. Another one, probably trying to tank the market. Waller speaks at 3 o'clock, 8:30 a.m. That's crude oil. Fed speaking 8 o'clock. He's speaking right now. Let's go watch the market, see what he does. Well, ABBV is gaining ground, but that's not the one we're going to watch. We're going to watch these over here. Let's go watch see the S&P. There it goes. Flush, flush, flush like a toilet. There goes the S&P. So whatever he's saying isn't good. Of course, we knew that. He's a politician. He thinks he's a Fed, but he's not. He's a politician. So let's see. The market's been kind of a little bit wild. We're up here pretty high, technically speaking. Let's come in here and look at the bulls and bears. Let's get that turned on here. All right. Gives us a little bit better view of what's going on. All right. We got the little hat going on up there. Let's bring this me up here. Where should we put me? Right there. So this is the S&P 500. And you can see it flushing out right here. Not too uncalled for considering the pattern that we're going through. This is just a little wedge pattern like this. So we talked about this yesterday a little bit. So that's not too out of the ordinary right there, considering what this pattern is up in here. We got to get our hedges on. If we don't have our hedges on, and we didn't put very many hedges on here in this portfolio, so we got to work our hedges a little bit better. We got to be a little bit smarter about that. We're down a little bit on this market because of our lack of hedges. We actually put some long positions on, and they're not performing well for us. We hedged them, but our hedges aren't working either. The market just going sideways. So if you're trading options and the market just goes sideways, you lose a lot in premium. So the premium is the extrinsic value just decays right away, just goes away, and your profits dwindle with it. Your money dwindles with it, so you have to be careful. Right? You need a market to go up if you're going to buy long positions. I know you knew that, but I just thought I'd remind you. Let's come and say hi to a few people and see what's going on in here. We got Bruce. Hello, Bruce. How you doing? It's great to see you. Kirk, it's good to see you in class. John C. Gazy, great to have you. We got Jay in the house. Nice to see you. Gary White saying hello. We got Barbara saying hello. We got a whole lot more people hanging out up here in the room than what said hello. So if you guys want to put up your little marquees, we'll make you famous. All right, here we go. What are we going to do with this thing? I think we're going to have to anticipate that the market's going to flush. Where to? Well, mathematically modeling this thing on the very first run, it says right down into here. That's where that baby's going to come to. And that makes sense. That's that little blue light right there. That's generally where it'll come back down and touch that as area of support, which is right at 50%. That's where it broke last time. So that's pretty common. Well, that's not good. We don't want to see the market flush, but that's what it's going to do. And it started today with good old Powell. So what do we got to do? Well, we got to make money on the way down. We could put a little order in here. We could come in here and say, well, probably for the next 90 days. We don't need 90 days. That's probably buying a little more than we need, but might as well buy a little extra so we don't get such time decay. We could just put a little put option in here, 90 days, and see what a put option costs out here. $1,400. So we could just buy a put option. $6. Plenty. Volume's at 93. Delta 0.40. Buy that. Pop it up there. $1,500. Should we put a little $1,500 in there? Okay, we'll just let's just make it simple. We'll just come in here and buy that. And that's just a little protection to the downside. That's just to say, well, you know what? We think this market might come back down into this Fibonacci sweet spot before it rallies. And it may not rally too much. It might go do this and then come back, clear down and test this low right down in here. It could very well do that. So just putting a little put option on there might protect us to the downside and help us out a little bit. It's only one. We go look at some other markets and see what else we got going. Here's the Qs. It's pretty extended up there too. It's way up there. Let's go see what a daily chart on the Qs are. See, it's way up there doing the same thing. And there's that 200% projection up there. That's that Fibonacci ruler we had. So there's where, on a daily chart, that's the long term. I don't know if we have to expect that. I'm going to put this line right across here. See this peak right here? That's where I think it's going to come to. We got another peak right here. And then we got, draw that straight line. Hold down your control key when you're drawing that with track and trade. And you can draw a straight line. Track and trade. What platform are you using? Oh, glad you asked. I'm using track and trade. Here you go. Up in the upper left-hand corner, you can see live stocks. That's the one we're using. Go get your copy at trackandtrade.com. 6 times stocks and commodities, 7 times stocks and commodities annual Reader's Choice Award winning platform. That's the one I'm using. All right. So go get yours. Come and join us. You can do what I'm doing here with all the tools that I'm doing here. You get 2 weeks to try it out for free if you like it. And if you do like it, you can keep it. If you don't like it, you can dump it. All right. If you got one that you love already, keep it. But if you don't have a nice platform that you love, this is a great one. Okay. Back to our charts. There we go. So there's our areas of support that we're looking at. That's going to be our first area of return down to here. And our second is going to be down to here. Now, once it does that, if it starts to slide, you got some other areas of support down here, right? So you just draw those in there as areas of support. And that's kind of where you say, well, if the market's going to go into a bear market, that's what just happened. Get back here, you rotten internet connection service. So do we want to put another put up there? We could put a put over here too. We just put one on the S&P. Nothing says it can't, back off a little bit and pop one more time and do one of these things. Certainly can. So I just think we're getting a little top heavy up in here and it wants to sell off a little bit, take some profits. So let's come in here and go to our options, another 128 days put option. That'd be a $2,000 insurance policy. So if we bought another one of those, we could put one right there. We put one on the Qs. We'll put one on the S&P. Let's go look at the Dow. Do we want to do anything on the Dow? That's the monthly Dow. And it looks like we're getting a little toppy up in there. We could get we could put one more on the Dow. That would give us 3 short positions to play against. How far did this one go? Hold on a second. I got to drink some water. All right. That's my lemon water. Do you guys drink lemon water? Doctor told me I don't drink enough water. I said, I'm a pilot. I fly airplanes. If you drink a lot of water, you got to pee in the air. You got to land. That's no fun. We've been trained not to drink water, right? Those of you who fly, you know. You got to pee in a little bag up there. That's no fun. Or you have to land. That's no fun. So I don't know. Just don't drink water because I don't want to pee all the time. Then he says, you're drying out. You got to drink more water. So I've been trying to drink more water. They want you to drink 2 liters of water a day. Is that crazy? Liters, the soda pop bottles. Man, I have a hard time drinking one. I struggle to drink one. All right, let's take this and go. How far did that thing go? All the way back there. That's a big run. All the way out there. Let's see how far this thing went. If we put this out here, see, we're right there. And that's a big tail. That's a big tail. Let's come down here and put it on this tail. Let's go like that. How far is that? We're right there. See? Same time. Same run. Bam, bam, bam. And then it flushed. How big was this one before we got a flush? It wasn't a real flush. It just kind of went sideways for a month. Oh, that's not a month. This is a monthly chart. So that means 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. That's a whole year. And this one went to there. And if we do this one from here all the way to there, out to here. So the last one, it went to here. This one went out to here. Oh, we've surpassed that one, and we're bouncing off of that one. Let's come in here and look at the daily, not the minute, daily. And oh, look at that. It's flushing at the blue lights right there. Should have bought this yesterday. Gonna be more expensive today. Just gonna buy one of these 128ers. Buy. Just as a little protection. Let's put it up one, get a little higher delta. Okay, we'll have 3 of those to play against. Let's come in here and buy my put. Just mark it into it. Okay, that's what we've got going right now. Protecting ourselves to the downside. Not something we really want to do, not something we really want to see, but it is what it is. Markets don't always just go straight up. Let's come in here and delete some of these drawings. We got the same thing happening on the little guys too over here. Double top up in there. Get that one. Let's go up this one here. This is the monthly. We're peeking out on that one too. I don't know if we want to put an option on that one. Yeah, we could. $900. That would give us 4 shorts. Oh, that one there is not paying off. That one's already bouncing back against us. Wow. What you doing there, Dow? We bought it at the bottom of the flush. Now it's coming back already. Huh. Or was that the spread? No, that's not the spread. Why is that at 185? It hasn't. It's weird. That's weird. Must have been a nasty spread on it. I don't know. I just marketed into it. Maybe I should have limited in. 128 days. What the heck happened? Oh, it was the spread. What the heck? I didn't pay it close enough attention, did I? Why in the heck did it do that? There's no volume on this thing. Well, that was a mistake. Don't trade that one. Where should we have been? 200? No, this one, it's really sucking wind. 37? That's the one everybody's on. Well, that's going to lose premium really fast. Well, we did what we did. Let's see what happens. That was a mistake. We shouldn't have done that. We got to be better, do more due diligence on those things. I generally just kind of considered that the quarterlies are going to have good volume on them and just went boneheaded into it. So that was a mistake. This one's not bad though. Look, 0 on the volume though. 6,000 on the open interest. Spread's only $7. That would have been a better deal, but we got zeros. Let's go to 93 days. Still nobody's trading it. Go to 37 days. Why are you all trading a bunch of 37 days? Extrinsic value drops like a rock. I feel bad. That 170 right there, that was a bad move. Oh, well. All right, let's go look at the Richie Rich fund. Let's come in here and go to 10. This is the first 10 on the Richie Rich fund. Are there any opportunities in here? Some of these markets are rallying and going up just because the overall market seems down. We got our hedges on to protect us to the downside. This market seems to want to keep going up. ABBV broke higher and broke higher. And then you got that nice little break right there. Third time's a charm. Charm 1, charm 2, charm 3. So we come in here and label these. We're going to call this A1, and that means this here is A2. A2 is not a bad place to get into a market, but this thing's really hyperextended on that first A1. Man, it really went up. We could come in here and you could buy a call. We could just come in here and buy a call and say, hey, we think that market's going to break higher now and continue to rally. I don't know why we would. We could go over and look at the fundamentals and see what's going on. Let's do that. ABBV. And you'll notice, I think I said this last time, we changed up the model for the Richie Rich fund. We've got new stocks in it. That was an earnings play, which is, we looked at this before. It's a surprise, was a down on the GAAP earnings, but up on the EPS. And on the revenue, it was a surprise revenue. I think that's probably what did it. Earnings per share at 241 at 2024, but their PE ratio right now, they're showing 80. That's a forward PE is 13. That's crazy numbers. Earnings per share trailing 12 months is 2.4. Next year, 13. There's no way that's 13. You can't go from 2.4 to 13. Next quarter, 2.5. This year, 21. In December, these guys downgraded it, and then they resumed. I don't know, Bank of America. Can't see where they did anything and resumed what. I wish they wouldn't do that. That really drives me crazy. Resumed. Resumed what? What was your last thing? We don't know what your last resumed was. Rating is neutral. Price target 191. Well, it's at 191 right now. And that was their price target. So it went right to their price target. When was that? That was December 10th. Today, Allergens Aesthetics to launch 3 new state-of-the-art training centers for the U.S. expanded high What does that have to do with us? AbbVie and Zillow Therapeutics announces collaboration and options agreement to develop novel tumor activities, immunotherapies at 37:30 this morning. Outlook dims as rival treatment gains ground, Goldman Sachs warns. That was in February, 3/20/11. Biogen reports earnings tomorrow. What to expect? I don't know. That's a nice A2 right there. We could put an order on that one. Options. What would you do if you want to do that? Let's go out 93 days and see let's just go see if any of these options are any good. Don't want to make the same mistake I made earlier. Nobody's trading them. Oh, these are puts. We got to look at calls. Still nobody trading them. Nobody's buying these things. Spread's $20. Nobody's buying this. Well, you got open interest at 3,648. Oh, 114 of these went through this morning. Somebody's buying that one. 685. But that's only a 37-day call. Guys, your extrinsic value is going to just bleed out faster than you can make any money. What are you buying those little short options for? Unless this thing pops and goes like a balloon, boom, you're not going to make any money on these stupid long options that are just little itty bitty tiny short terms. I mean, you can. Yeah, we do it sometimes, but it's very strategic. I wouldn't want to do that here. I guess you could get in a little short-term one just to see if it's going to go. Don't want to spend a lot of money. $139 on 9 days. I guess. That's what everybody's doing. They're just putting little 9-day ones on there. I guess you could put a bull call spread on there. That's probably what they're doing, little 9-day bull call spreads. Come in here and buy this. And then you sell one up here just to collect a little bit of money. You do 10 of them. Guess that's a play you could do. Make about $1,000 if it rallies over the next 9 days. It's going to have to go pretty hard. It's going to have to go all the way up there to make any money. I don't want to do that. We could put it on just because that's what it seems like, just to see. Well, they're putting it right there. Well, there's 888 volume today to buy these little short 9-day ones, but they're not. There's only 35. Well, that's on the other side. We got to go look at the puts. That's selling a call. Yeah, that's selling a call. They're only putting 35 of those on. 2363, 23. Well, the open interest on them is, well, that's 948 of them today, and 35 of them went on today. That's a bull call spread right there. That's what they're doing. I don't think they're not putting, there's 948 at one of them today, but they didn't put the bull call spread side on. Only 35 of them are bull call spreads. The rest of them are just going long. We could try it. Let's try it. See if it makes any money. All right. We're going to try a little bull call spread here on AbbVie on that A2. It's only 9 days. Amgen. Well, what the heck? It looks like that needs to come back down a little bit too, doesn't it? If we just go off this low here, I'm going to discount that bottoming tail. Just go off this one here. It's bouncing 38.2 right now, but I think that thing's going to come back down into here. If it is, we could buy. Wait, I want to wait for it. I want to wait for it to come down here first. Once it comes down into this sweet spot, we'll sell some puts. and collect some premium. But right now, if we sell it up there, how much can we get out of it? Let's come and see. If we sell a 37-day put, sell a put down here, well, that's not bad. I mean, you could get $286. I think we could sell another one once it gets down there. Problem is, if it keeps going down, you're just gonna sit through this ugly, nasty drawdown. Nobody likes to see that. So there's no reason to put that on. We have to wait. Just wait for it to come back. What if it doesn't come back, Lan? Well, if it doesn't come back, it keeps going and you wait for it to come back next time. That's how it works. You wait for it to come back next time. Okay. What if it just keeps going to the moon? Well, then you say, see ya. I missed ya. Would have been fun to be on ya. Or in ya, whichever it is. Whichever you like, on ya or in ya. Had a nice break right there at the blue lights. Wow, that thing took off, didn't it? We need a little pullback. We need a little give it a little, give it a little. We'll wait on that one. We're going to wait, and we're trading this one. The way we're trading it is we're waiting for it to come back into the sweet spot. And then we're going to sell a premium, collect the premium, and see if we can't get a long position out of it. All right, but we're just going to wait. I know it could go like that. If you want to get in at that top of that thing, go ahead. But I don't want to. I don't want to. We get that blue light right there. It hasn't broke it. I want to see it break that blue light. Where's the yellow lights, Lan? Okay, let's turn those on. Well, they're clear back here too. Look, the blue light's even closer than the average true range. Let's wait on that one. BlackRock. Oh, this is our buddies BlackRock. Everybody loves BlackRock. Not. We're back here at, wow, if we're bullish on BlackRock, we should be putting in some options orders right now. That scaling needs to be, chart preferences need to be fixed. Let's put that at 50. That's better. What do you want to do with those boys? Boys and girls. Man, look at that thing. That bottom is clear down here at that yellow line. Let's draw that in there. Bottom of that trend started right there and went up, up, up and away. Up, 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 up and away. We generally like to put our options in there when it gets back to the red line, but man, that thing, if we go from this to here, it's still got some more downside. 38.2. It's bounce 38.2 right here. You want some BlackRock? I don't want BlackRock till it's back down in here. Let's see. We go off of this one, this one, this one, this one. We could put some, that'd be 130.9 on the back pullback. It's sitting right now at the red line on the last 100 days on this peak here from here to here. What do you think, guys? What do you think? I don't want that yet. Let's wait. I think we're going to get a little bit more downside. We're going green, yellow, red. How much more red are we going to get on BlackRock here? I think we're going to see it come back down into here a little farther. I think we're trading this one too. We're trading all these. We're just going to wait, put some orders in. What if you want to take a short? I don't want to take a short here because it could bounce that 38.2, that 100%, right? That B line right there. That's a strong area of support right in here. It could bounce that support, come back up, and then come back down here. Let's wait on that one too. BM Bristol Myers. Squib. I always call it Bristol Myers squid. Bristol Myers squib still sounds kind of funny to me. My 14-year-old humor. Look at all these. Ends too not respected. What about these? Respected? Not really. All the top, look at all those tails. Kind of. That kind of ended right there, didn't it? Up in there. You got all these little trend lines. You got these little shelves. Look at these little falling shelves. Broke the blue lights there. We're bouncing them. We're bouncing the red line here. That's the 100. If we come and draw our Fibonacci ruler in here, that way back there. Let's go see if it's any further back. Oh, it is. Look at that. Oh my goodness. That's why that yellow line's clear down there. Put in your Fibonacci ruler from here to here. Where's the delta cone of probability bringing us? Still down here. Bristol Myers squib. Bristol Myers squid. What do you guys think? I think that, I don't know. It's right there. We could sell one right there, but we'd have to anticipate that thing's going to turn and rally from here. We haven't got any longs. We're short on everything. Except for, no, we put Abby. Abby, we put long. Bristol Meyer could pop here. It's only $250 for a single. That's at 37. We don't want that anyway. Let's go look at 93. That's not too bad. That's worse. 415. That's the one we want right there if we want to buy. Go long. Hate to go long right there, though, with an option. There's no reason to give me in. That's just catching a falling knife. Let's hold off on this one, too. See, there's got to be some better opportunities. Oh, Cisco. Cisco. Put options. 93 days. Nothing. Dead. Are they at 128? Where's it? Oh, there they are. What about 37s? Oh, we got a lot of 37s. Look at that. Cisco. Oh, we don't want 2 days. Who put a 2-day one in there? I don't want 2 days. How did that get in there? 37 days. I don't even want 37 days. That's just too short. 93 days. 128 days. That's where they all are. 128 days. They're all right there. Well, I'll buy it in the money, out of the money options. Let's put one of those on just for good measure. Just to see. The premium on it's, I don't want to do that like now. Look at the premium. It's 227 and the theoretical is 167. But this is 128 days out. Let's go look at the interest rates. I think we already looked at the interest rates, but those were for, if we go 128 days out, that would be about 3 months. We need 4.35. 4 point, well, that's not going to change much. That's close enough. Close enough for options. But look at that, 230 is the premium on the, and then the theoretical value is 168. You're really paying a lot of money for those. Oh, we don't want that. That's too, we can't do it today. Sorry, guys, we missed that one. We'll wait. Maybe this afternoon. Maybe close the business. And we got to see that premium come back down closer to the theoretical value. That's, you're paying a way big premium for that. Too expensive. All right, Chevron. Oh, look at Chevron. Chevron's trying to go along. That's a B. It's an ugly one, but it is. It is what it is. It is what it is. That's an A1. That's an X1. That's an X1 SA1. Why is Chevron going up? I thought they were supposed to be, well, maybe because they can drill, baby, drill. They're going to sell a lot more oil. This is a B2 or a B1, sorry. This is a B1. We love B1s. B1s are our favorite place to get into a market. Wow. Well, there they are right there. Oh, those are puts. Man, calls. Ooh, they got a lot of them open interest. They already put them on. They didn't put any on today. What about 93? Are we late to the party? We must be late to the party. 37s. Man, there's a few people buying a couple 37s, but those are too short. You're going to get your hiney handed to you. Your extrinsic value is going to decay so fast. Look at that. They're putting 600 of these things on, went on today for 9 days. They must think that thing's going to pop like a rocket ship to do that. Why would you do that? It's not, there's nothing saying that thing's going to go like a rocket ship. It's just wandering higher. Let's come in here and go back down and see if we can't get something a little better. See, nobody's, well, they've got a lot on the open interest. There's just nobody doing it today. Well, today's a sad day because of the Fed. Look at that. Somebody put on 125 for 184 days. Now that looks tantalizing. That looks tantalizing if you think that Chevron's going to make money. And then we could do some covered calls against it. We could do that. John C. Gazy says that they're drill in the Gulf of America. I looked that up on my little iPhone, and it's been changed already. My little iPhone says Gulf of America on it, on the map. Did you guys go see that? All right. You see what Google did, though? Google, do no harm. Google, most dishonest organization on planet Earth. Google. They made it so that when you scroll and scale in and out, it changes back and forth between Gulf of Mexico, Gulf of America, Gulf of Mexico, Gulf of America. They made it so it's both. I thought that was funny. Okay, $1,345 if we put one of those on. If we do that, we could do a synthetic long position here and then trade covered calls against it. That would be fun, just to give it a shot. We tried that on another one and the market tanked on us. So we got in trouble on that one, but we'll have to go take a look at that one. But that might be fun here. Let's come in and do that. Should we do that? That sounds fun. Let's come in here. We'll buy this one. We might put it a little bit further in the money. Let's go 16. There's $2,000 for a single. Let's go see what the puts are, though. We don't want to do it if we're going to get in trouble. Let's see, do both of them. So where's that at? Where did I put that? How come you're not showing up? Oh, it's the wrong month. 184. Okay, where's that baby at? 200. Oh, look at that. Deep in the money, sir. 3,000. I got nothing today. 273. Oh, look at the premium on that. Everybody's got the same idea. Lan, you didn't think of this. Look at that. 273 on theoretical, 335 on the premium. Man, I really wanted to do that today. It's too expensive. Let's go look at a different one. Let's go back. What's 219? 219's call 232. It's still $400. 320, 300. That's almost $300, $350 in premium that we'd have to pay. I don't want to do that. Plus the spread's $50. Spread. Oh, that one's not. Oh, that's a put though. We'd pay 400. We'd pay 275 for the. Wow. Look at the skew on this thing. Wow, look at the skew on that. Between that 140 call and the 140 put. Just $2,000 for the call and it's 430 for the put. You can't do a synthetic long position on that. They're supposed to be the same. Everybody wants to go long on Chevron. Well, and then to do it, well, right at the money's at what 219s are. Oh, you can get them for bargain. Look, the theoretical is $13.93 in the for that call, and you can buy it for $1,122. That's a deal. That's a deal. The premium on that. Look at this though, $970 for the put, $830. They think that market's going down. They're covering themselves to the short side with those. A lot of people buying those. That's their hedge. Unless they're doing, I don't think they're doing synthetic longs right there at the money. No, because look, the volume's only 7 on the long, but they bought 721 puts today. Would they do that? There's 5,991 open interests on those puts, and somebody bought 721, or a group of people bought 721 puts today, 219 days out. Paid a premium for them too. What are they doing? What are they thinking? Look at the spread on that baby. $210. I don't think they paid that. Look at the spread to the puts. Let's go see what else everybody's doing. Let's go out a little farther. Let's go out to the, how many days are in a year? 360. That's 338. So we got, oh, look at the spread on that. $185 to get into that thing. $45 to the put side. Those are little, well, they're still out of whack too, but not as bad as the others. If you tried to put on a synthetic long at the money for 300 days out, what if you went in the money? Look at the spread on the puts. They get really ugly down there. Wow. Huh. Well, you could do it the other way. You could do, what you do is you come in here. This is how you do these. This is how you do these poor man covered calls with options, synthetic longs. So you come in here and you do the calls. I'll show you. See if we can find an opportunity. We can't. This is 300 days out, and there's nobody playing the game. Well, they're not buying them today, but they bought it. They got a bunch. Look at open interest on these things. This one right here. See, so you spend. Let's buy that. So you put that in there like that, way down here. We probably don't need to go that far out. Maybe we'll come in, but it's got to depend on where they're putting them. Look, they're all so expensive. That's really the only one that's available. So you put that thing on, and then you're like, wow, that's $4,300. I want it to be synthetic. So I come over to the puts, and if you put the puts at the exact same place, which is the 115, that would be here, and you're only going to get $89. So that ain't going to help you, buddy, not against your $4,300 entrance. So you got to come back up here to the at the monies. So you sell your puts right here, at the money, and it's still not very good. I mean, look, you're gonna have to do 2 or 3 of these puts. 3, 4, 47. That would give you a credit. That'd be $480 credit. I don't know if you want to do a credit, but that way you have to pay 715. And that's how you how you put on your synthetic long with your covered calls. But you got to have 3 covered calls to cover your one long synthetic long. Your one, and then you sell covered calls against that. You need to have equal. Well, you can only do 1. That would give you a credit of $548. But then you could only sell 1 covered call against it. And that way, what would that be? If we sell a call, but we do that at 37 days, we sell a call right here. Dollars. That's only $81. That wouldn't, why are we sitting here fiddling around with an $81 trade opportunity? That kind of sucks. $81 in 30 days? That would be putting a synthetic long position, poor man's deep covered call option strategy on Chevron, and then sell covered calls against it. But the covered calls are only $81. And you got to sell 4 contracts to help you cover the cost of the one long position. Place order. Did it let us do it? Nope. Edit. Where do we have to go? 468. Oh my gosh. It's going to cost us a small fortune to put this thing on. $468, 987668. $237 to put that on. All right. This is, my friends, a test of the emergency broadcast system. Let's make a note on this thing. We're giving it a shot. We want to see what happens when we put on a synthetic, a deep in the money synthetic long position with a split put and call and sold covered call. Test. Let's see what happens. Should we see what happens? We're going to need Chevron to go up. That's what's going to have to happen. Problem is, this Chevron right here, if it goes up, we really don't want that covered call on there. It's only $81. And it's going to, we really don't want that covered call on there. Because that market could easily break above that and go clear up here. I mean, it could break. It likes to move at about that size. Okay, then. If that's the case, it could, well, before it flushes back down. And that looks like that's what it did last time too. Snaky. About the same. It likes to move in those. That's all. Look at that. 3 times. 1, 2, 3 every time. So that's our target right there. So that'd give us max profit on our covered call. But then we'd be locked into it because it's so far out there. It's 37 days out. just to get $78. Well, let's try it. Let's see what happens. I don't know if that's a good idea or not. But that's a credit spread. We made money on it already. Well, kinda, not really, kinda. Let's go see Home Depot. Oh, what's Home Depot doing? Wow, that's one big Head and Shoulders, isn't it? So we go one, boom, 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 boom. That's our right shoulder. So that's trying to go up. That's a 3-drive pattern. So you got drive 1, drive 2, drive 3 to the top. Let's go back farther and see what's back there. Oh, you got all these little drives too. So if we have to count that one, drive 1, drive 2, drive 3, it broke again. So we're counting that 3 drive as the first drive of this big thing here. I don't know. That's kind of falling apart on us. Because that's the reversal. So this is the ABC coming down the back side. A, B, C. See, those blue lights kind of tell you. You follow the blue lights. You could put the yellow lights in here, but they're a little bit more aggressive. So they break more often, like this. But they still break basically the same spot. It's the average true range. So you get the flip about the same spot. A little earlier. But you get false flips. A little bit more. More false flips with the yellow because it's a little more aggressive. The way I have it set anyway. So that thing's flushing out. Probably come back down into way down here. So this is where we'd look to want to start picking up some possibilities of shares. This is so we sell some premium down here, but we wait for it to come down. We don't want to get in there right now. So this is X1S A1. What are you talking about? X1S A1, Lan. What the heck is that? That's our probabilities. That's our probabilities. Those of you who are aware, you know that you can get your probabilities table out of the Stock Market Playbook of Strategies on Amazon. 238-page workbook. Gain discipline and courage through knowledge and strategy. Who doesn't want that? That's what we keep counting here, counting and measuring. We're counting all these things because that's the probabilities. And those probability tables are all in that book right there. 238 pages, an 8.5 by 11 book, full color. It's a big old book. It's really nice. Lots of pictures, lots of charts, lots of graphs. Everything you need to know how to do all this stuff we're doing here and here and here. All right. So that's where you can go get that. Get your probability tables. If you don't have those memorized, then lay that table out on your desk and look at them. Lots of examples in that book. It's like playing blackjack in Las Vegas. If you go down to Las Vegas and sit down at the table and you don't know the rules and you don't know the odds of your hand, you have no business sitting at the blackjack table. And I say the same thing about the stock market. If you don't know the probabilities of where markets are going and how they're getting there, how much time it takes them, you got no business sitting at the table trading the stock market. You need to know your probabilities. And that's what we're looking at here. Fibonacci, Elliott wave, accumulation distribution model from Wyckoff. We got a couple of indicators in here. Chalk and money flow we like, moving averages, just the MACD. Volume's dying on us. Look at volume dying down there. And then I like to use options to trade with. You know, we don't have to. We can just start trading shares. We can do some of that too, but that's boring. So Home Depot looks like it's going to come down here. So you could short Home Depot in anticipation of the fall, which we would do with the put option, right? We just come in here and go out 128 days and price one of those put options out, see what they cost. Man, not a lot of people buying them. We got a lot of people picking up yesterday. They bought one. They were smarter than us. Today they're going to be expensive. Let's go to 93 days. 1827.15. You're going to pay a premium for them. Plus, you're going to pay $75 for the spread to take that thing down. And you're paying that premium because the market's flushing right here in the morning. If you waited till this afternoon or maybe even this evening, we don't know how far the market's going to fall, but it'll usually pull back a little bit. And then that premium will not be so wide. Go from 18 to 15. It'll probably go back closer to the 15. And you won't have to pay that premium for it. But then we wouldn't be on YouTube and you wouldn't see me do it. So if you want to just buy that, we could drop it in. Not very many of them in the open interest. We want 1,000 in the open interest. Look at the spread. We don't want that. Let's go look and see where everybody else is at. They're going to be all up here at the 37 days. These guys, you guys, knock it off. Buy a 9-day options. I guess you can. Just little shorties. Oh, look at the spread. $110. We ain't doing that. That deep in the money right there is 25, 352. I hate buying those deep in the monies, though. That's just, come on, guys. Don't trade those. 93s. Might be able to do that one for $45. But still, you're paying $1,600 for something that's only worth $1,349. Yeah, we probably missed our opportunity on that. There's nothing there we can do. We get our heinies handed to us. It's flushing too much right now. Need to wait for a little bit of a pullback. See if it won't pull back. Change those numbers up a little bit. Put them more in our favor for the short side, and then maybe pick some up. But we're looking for that market to come back down and test these lows down in here. That's an X1SA1. This would be an X2SA1 when it crosses those blue lights. X2SA1, and that would be a good place to put some premium onto the long side, but it's got to cross those blue lights first. And it probably won't cross those blue lights until out in here somewhere. We're going to guess. We're going to make a wild-ass guess. Scientific wild-ass guess that it's going to be right out in there somewhere. Based on that first little drop right in there. That swings around and comes back around. That'll come in. That's what we'll expect. Right out in here somewhere. We could try to put one on there. We'll have to wait and see. All right. Can't do anything there. Oh, Coca-Cola. You know what? Oh, Warren Buffett's going to be sad days. He's a big Coca-Cola fan. Had lots of Coca-Cola, but he sold it all off. Got rid of it all. Maybe this is where he got rid of it. Right down through here. Maybe he's buying it back. I don't know. You never know. But they said he dumped half his portfolio when Trump got elected. He's a hard. He doesn't like Trump, so he's trading emotionally because his buddy's dead, telling him, don't trade emotionally. But now he's got to. Can't hand it. Can't stop himself. Trading off his politics. That's what I think. He's still smart. I mean, you can't. I'm no Warren Buffett. But nonetheless, he lost his sidekick. He sold off half his premium. And, you know, it might be because he's looking at how extended those markets are. We've done that too, right? But he probably sold off a lot of his Coca-Cola. Now it's coming back. Probably wished he still had it. Or maybe he's buying it back. Who knows? You know, you never know. He might be the one that's driving it higher. But look at that thing go. That thing is going to the moon. Can't chase that, baby. We gotta need a little pullback on that one before we can get in. That's an A1. You want to count it? Well, it's actually, this is your little ABC top formation. You want to call that your X1SA1. That little thing broke right there. Kind of funny. X2SA1. That would be the X3SA1, but then it failed and created another X4SA1. It is what it is. So that's your new A1. I'm not going to put in the X4 SA1. That's on the coming down the downside. So we're just looking at the upside. So there's your A1 to the upside. This is a B1 right here. So that's your first entry. We oftentimes miss the A1 because we're a little bit hesitant to get into A1s because it's the first break and we're not sure it's going to go. So we wait for the B1, and the B1's where you like to get in. But we didn't get in on this B1. Why not? Well, because we weren't looking at the market. We weren't paying attention. Same thing here. Look at this beautiful 3-drive pattern. You almost call it a 4-drive pattern, but there's drive 1, drive 2, drive 3 down. So there's your ABC bottom formation. Dun, dun, dun. This is Pepsi. And if Coca-Cola took off and went like a banshee, why wouldn't Pepsi follow? Generally does, seasonally speaking. If you look at Trade Miner, it'll tell you that it follows it just like a train on rails. But why it's not popped and run already, I don't know. That's kind of weird. It might be, it might be because Warren Buffett went and bought a whole bunch more back in again. You never know. And if he bought Coca-Cola and he didn't buy Pepsi, well, Pepsi might struggle to snaggle all day one without breaking the low right here. If that breaks those blue lights, that's going to be a B1. You'd like to see it be a B1 be a little stronger than that, add a huge pullback, and you like to see an X3S way have a little bit larger run up before it flushes back down. But I think we would not be hurting at all to put some money on this right here. We would like, let's go see what we can do. 93 days out, volumes, nothing. Look at that, it's dead. Oh, that's a put. Let's go do calls. 93-day calls. Is that really that dead, or is our volume just not coming in? No, I see things changing. That's it. Nobody trading. I would like to play this one a little differently. This one, $144 a share. 338. Oh, look at these. What if we did this? I think better here. What if we did this, guys? What if we bought some of these? Just for kicks and variety. That'd be $10,000 into Pepsi. And then we sell some puts up here. You sell them right at the money. They're still not giving us everything we need. We have to sell 10 or 11 of them to get down to. We wouldn't really want to do that. If we sold 5 of them, if that comes down, we might get assigned, but that's only if that's 338 days out. So that would be our synthetic long position. Having 5 and 5, putting 10 and 4, looking for the B1 to rise, and then we could sell some covered calls against it. Let's see what a covered call could make us. So let's say do 37, sell a call. $95. A lot of good that is. $25. My gosh, $276. That's not bad, but then you can give up all of your upside potential. And at least do that. $95, all you're going to get out of it. Well, that sucks. We really have to be confident the market's going to go up to do this, because we could get our heinies handed to us. But if you don't take risks, you don't make money. Market could still flush out on us. But Coca-Cola's taken off. Pepsi should follow. Let's get rid of this. And let's just go ahead and are they gonna $11? That's not bad. Let's see where we're gonna be. 11. We got to go all the way down to 11.25. Ooh, that's gonna be ugly. Ooh, that's a $725 spread. To put all that on, $14,000. $4,000 is coming our way, and $10,000 is going out. It's going to cost us $5,000 to put that on. I want to do it. I really want to do it. I want to do it, but I don't want to pay that $725. We have to make $725 to break even. 725 divided by 5. Ooh, it's ugly. Oof, oof. That's painful. I think it's going to give it to us. It's not going to give it to us anyway. 11:30. Come on. Not going to do it. Something screwed up. Something screwed up. I really want to do that. I want to do it. I really want to do it. $338 on the calls. We want to buy this one, and we want to sell this one. Oh, they might not let us do it. They might let us do it down there. We might have to go down there. I don't like it there. I like it up here. Come on, let me do this. Calls, I want to do 5. 11:10. They're not going to let me do it. There's just no volume. Nobody on the other side. Even the demo's like, no, it says volume 0. Nobody's going to trade that. So they're going to simulate that you can't get in. I really want to put that on. I really want to put that on. Okay. Let's see, what can we do then? Let's go back to calls alone. 400. They're gonna 300. What's the spread on that one? 65. This is 20. Buy. Let's just buy 5 of these. 1, 2, 3, 4, 5. And then we're just going to go to the puts, and we're going to sell 1, 2, 3, 4, 5. So that's a free trade. Pay $15, but the market's going to. What's our spread? 110. Ooh. I don't think they're going to let us do that. I'm trying to go out an entire year on Pepsi, and they're just not, nobody playing with us. They don't want to do it. All right. Let's go closer in. Let's see if we can find something that's got some more players. More players. 156. There, we might get a little bit. 128. 93 days. That sucks. 128. That's probably where we're going to have to do it. Oh, might be able to get it there. 156. That's better. They'll probably let us have that one. I don't really want to do that one. We can do that one. So that's the puts. What about the calls? 128, 156. None of these are very good. We already looked at that one. They got more out there than we do. I really want to get into Pepsi right here. 156, 128. Yeah, maybe. They put on. These dumb nincompoops are putting them out of the money. All right. That's not a fun play. Look at that. Yeah, you rotten buggers. I don't want to go out of the money. I'd rather go just one click in the money. That's where I want to be, right there. Well, and they're only 128 days. That's not even worth it. That's just not even worth it. All right, we'll put 1 on. 865. Look at the spread. Oh, I guess it's not bad. Oh, it just went to 80. Oh, well, that means it's not going to work. Let's just see if the market will let us have one of those. Okay, we got one. After all that, we just get one Pepsi. That's no fun. We wanted a lot of Pepsi. Okay, Pfizer. Well, they're tanking. Surprise. Everybody hates them guys. All right, there's the next 20. The next 10. But that was the first 10. So there's what we got going. Looks like we got, what, 3 positions on? That was it? That's all we could do? So ABBV. What did we do with that? We just put a bull call spread on? Is that all we did? A call and a sell? Is that what that is? 9-day bull call spread? Yeah, that's all that is. Let's make a note. Lousy bull call spread. 9 days. That's all we could get out of it. So we're giving it a shot. I'm not real thrilled with that. We'll see. Amgen. That's the one we're waiting for to come back. BlackRock. We're going to look for it to come back down. First green candle to make a new high. We'll see if, or at least first yellow candle to make a new high if you're using bulls and bears. We'll see where that turns around. I kind of want to put, yeah, I don't want to sell any premium yet. We'll wait and see. I want to see it bounce off that 38.2. If it'll come down one more day tomorrow. Down in here. We could put some premium down in here and collect some premium. Bristol Meyer. It's bouncing off the red line. It's been going sideways. I don't know. We could put something on here. We could sell some premium. It wouldn't be bad to have some shares right here. Bristol Myers only $52. Let's do that. 37 days, sell a put. What could we get out of it? Nothing. Let's put it right at the money to get $100. I don't want to do that. Never mind. Cisco. Just reviewing the ones we already looked at. There's $153. We're down. That's the one we feel bad on. We got our hiney handed to us on the spread on that one. Or is this, no, is this a bigger, oh, this is the 330. Oh, this is our covered call. Synthetic long. Oh, this is one I'm a little bit more excited about. We did pay a lot on it though. Home Depot. Waiting for that one to come down. Coca-Cola. We missed our chance on that. B1. Pepsi. We're going to try and catch it over here though. And Pfizer. Yeah, everybody ought to just short Pfizer. Short Pfizer to zero. It's $25 a share. Can you believe that? That thing was trading $61 a share back in 2021. I think it's split since then too. I think it was like $400 a share, wasn't it? Look at that thing. It just dusted it. Bad reputation. I don't know. We put it into the thing because that's the, you know where I get these from, these top 30s. I get them from SCHD. So these are the top 30 of SCHD broken down by tens. And SCHD is really good. So these all have pretty good dividends because that's what the D stands for in SCHD. It's a big fund, big dividend fund. And they refactored their fund. They used to be all these different stocks. Now they've refactored them. They got all these new stocks in there. So we had to refactor our Richie Rich fund. So that's what it is. Did you see what they are? So that's the top 10. The next 20 are these. I'll just put them in there. You guys can snap a screen capture. And then this is the next 10. So that's the 30. The top 30 distribution on SCHD. And those are why we're trading these. We want to see if we can't get some positions on this market. I don't really want to spend a whole nother hour going through the next 10. So we'll do that on Wednesday. I'll do that. See if there's anything in there for my real money portfolio. Real quick here. Ooh. EOG. Ooh. Take your dollar calculator that's already gone 3. And then say, it likes to go in this. No, it likes to do these. It sure does like to do these. That's where we'd expect that market to go. I don't know. It likes to bounce off that top too, though. Likes to stay in that. $13,000 to put 100 shares on that thing. Wow. What if we come in here? It's $160. Yeah, we'll wait on that too. All right, guys. I got a Sunday school lesson for you. Don't fall in love. Don't fall in love with your trades. Perfect your exit strategy. Remember, the only way to bank a profit is to get out. You got to take your money and run unless you're paying dividends. So the only way you make money is to get out of your trade. So perfect your exit. Don't fall in love with your trade. Don't stay in there all the way through losing all of your profits. That's the name of the game. All right. If you guys had fun today, do one of those thumbs up things. If you're not a subscriber, go ahead and do that. And we'll check it out again on Wednesday morning. Tomorrow we'll do a little day trading in the afternoon. Yesterday we got our handy handed to us. We just kept trading, even though it was a crappy market. We knew it was a crappy market. We just kept trading anyway. That was a bad mistake. But we wanted to keep trading. But it was a bad mistake. So on Wednesday, we'll try to redeem ourselves. That's tomorrow afternoon at 1 o'clock Mountain Standard Time to do a little day trading. We'll see if we can't get our money back. Come and join me. It's fun. It's fun. What else you got to do? You ain't got nothing else to do. Come and hang out. All right, guys, we will catch you tomorrow.